June's job report, uncovering the hidden challenges of the U.S. economy. On the surface, the June jobs report paints an upbeat picture of the U.S. economy, showcasing a low unemployment rate, solid job creation, and wages that are growing faster than inflation. However, a deeper dive into the details reveals some significant cracks in the seemingly positive outlook, all of which can be traced back to President Donald Trump's economic policies. But here's where it gets interesting. The headline number of 147,000 jobs added significantly surpassed the forecasted figure of 117,500. The growth was seen across generally stable sectors such as local and state governments, education, and healthcare, with leisure and hospitality also contributing to the positive trend. Additionally, the unemployment rate dipped to 4.1%, a pleasant surprise against the anticipated rise to 4.3%. And this is where it gets controversial. Despite these encouraging indicators, some underlying issues could complicate the overall picture. For example, although the labor market appears strong at a glance, Americans are finding it increasingly difficult to secure employment. The average duration of unemployment increased from 21.8 to 23 weeks, with the percentage of individuals unemployed for more than 27 weeks creeping up to a 3-year high. A contributing factor? The unpredictable nature of Trump's tariffs, often leading businesses to delay key decisions, including hiring. Here's another crucial point most overlook. There had been a significant dip in manufacturing employment, decreasing by 7,000 jobs for the second consecutive month. This trend is worrisome for a sector that forms a cornerstone of Trump's economic agenda. Moreover, job growth has been uneven, largely driven by sectors less impacted by tariffs. What about the broader implications? The decrease in the average workweek hours from 34.3 to 34.2 hours suggests employers might be reducing labor demand, a potential warning sign. Economist Dean Baker from the Center for Economic Policy Research points out that this could signal diminished labor demand. Additionally, the report highlights that unemployment among Black Americans rose from 6% to 6.8%, a figure that needs careful observation to understand its wider economic implications. And don't overlook this key detail. Since January, approximately 338,000 women have exited the workforce, while 183,000 men have entered. This trend, noted by the National Women's Law Center, shows a gender-based disparity in labor market participation. Let's not ignore this financial reality. Although wage growth continued to rise, it did so at a slower pace than economists had anticipated. Average hourly earnings increased by just 0.2% in June. This situation hints at a slowing in the wage acceleration that was expected. A closer inspection reveals interesting trends. The reduction in the labor force size, partly due to the departure of over 1 million foreign-born workers, had a significant impact on the unemployment rate. These drastic policy implementations, Trump's immigration controls, have impacted companies by stripping away a significant segment of the workforce. Does this mean the economy is on shaky ground? The U.S. job market continues to defy expectations. But with President Trump's deadline for tariff negotiations rapidly approaching, uncertainties remain. What do you think? Are these subtle signs pointing towards underlying weaknesses? Share your thoughts and join the discussion.